Welcome to Voice of Africa, where we delve into the most compelling stories shaping our continent. If you're passionate about understanding the intricate dynamics of global economics and international relations, especially how they impact Africa, you're in the right place. Don't forget to like, share, and subscribe to stay updated with our latest content. Now let's dive into today's video, the economic impact of BRICS countries in Africa. Did you know that BRICS nations account for nearly 20% of Africa's total trade, creating a ripple effect that is transforming economies across the continent? BRICS, an acronym for Brazil, Russia, India, China, and South Africa, represents a group of emerging economies with growing influence on the global stage. These countries have increasingly turned their focus towards Africa, drawn by the continent's vast resources, strategic locations, and potential for high returns on investment. The relationship between BRICS and Africa is one of mutual interest and opportunity, marking a new era of economic cooperation and development. However, the partnership is not without its challenges and complexities. African nations face significant economic hurdles, including underdeveloped infrastructure, political instability, and financial constraints. At the same time, the involvement of BRICS nations offers substantial opportunities, from infrastructure development to technological advancements and increased trade. BRICS countries have been particularly active in various sectors across Africa. For instance, China has been a dominant player, investing billions of dollars in infrastructure projects such as roads, railways, and ports. The China-Africa Development Fund, established in 2007, aims to stimulate Chinese investments in Africa, focusing on industries like manufacturing, agriculture, and energy. India has also made significant strides, particularly in the pharmaceutical and information technology sectors. Indian companies have set up numerous joint ventures and production facilities across Africa, enhancing local capacities and creating employment opportunities. Additionally, India's concessional credit lines have funded critical projects in areas such as renewable energy and healthcare. Russia, on the other hand, has been expanding its presence in the energy sector, with substantial investments in oil and gas exploration in countries like Nigeria and Angola. Russia's nuclear technology is also being introduced to the African market, with agreements to build nuclear power plants in several countries, aiming to address the continent's chronic energy shortages. Brazil's involvement, though relatively less pronounced, is notable in the agricultural sector. Brazilian agricultural technology and expertise have been instrumental in transforming African agriculture, particularly in countries like Mozambique and Ghana, where Brazilian techniques are helping to improve productivity and sustainability. South Africa, as the only African member of BRICS, plays a pivotal role in bridging the interests of the continent with those of the other BRICS nations. South African companies are increasingly investing in other African countries, promoting regional integration and economic cooperation. Despite these positive developments, BRICS involvement in Africa has its share of criticisms. One major concern is the risk of neocolonialism, where the BRICS nations, particularly China, are perceived to be exploiting Africa's resources without adequate benefits to the local populations. There are also worries about debt sustainability, as many African countries have borrowed heavily to finance infrastructure projects, leading to fears of a debt trap. Another criticism revolves around the environmental impact of BRICS investments. Large-scale projects, especially in mining and energy sectors, often lead to environmental degradation and displacement of local communities. This raises questions about the sustainability and ethical implications of such investments. Nevertheless, the benefits of BRICS involvement in Africa cannot be overlooked. These countries have brought significant financial resources, technical expertise, and market access, which are crucial for the continent's development. The infrastructure projects funded by BRICS nations are vital for economic growth, facilitating trade, improving connectivity, and creating jobs. Moreover, the technological transfers from BRICS countries are helping to build local capacities and foster innovation. For instance, Chinese and Indian investments in Africa's technology sector are enhancing digital connectivity and expanding access to affordable technology solutions. The economic relations between BRICS and Africa also promote diversification of Africa's trade and investment partners, reducing the continent's dependence on traditional Western partners. This diversification is essential for enhancing Africa's bargaining power on the global stage and ensuring a more balanced and equitable global economic order. It's important to remember that these partnerships are a two-way street. While Africa benefits from investments and economic growth, BRICS nations also gain access to new markets, resources, and strategic alliances. This mutual dependency can lead to a more integrated and interdependent global economy, where the growth of one region positively impacts the other. Now let's take a closer look at some specific examples of BRICS investments and their impacts on Africa. China has been heavily involved in Kenya's infrastructure development, particularly with the construction of the Standard Gauge Railway, SGR, linking Nairobi to the port city of Mombasa. This railway is expected to boost trade and commerce by reducing transportation costs and times. Additionally, Chinese companies have invested in Ethiopia's industrial parks, which are aimed at boosting manufacturing capabilities and creating jobs. In Nigeria, Indian pharmaceutical companies have set up production plants, ensuring the availability of affordable medicines and reducing the country's dependence on imports. India's investment in renewable energy projects like solar power plants in countries such as Tanzania is also noteworthy. These projects not only provide clean energy, but also help in addressing energy shortages that have long plagued the continent. Russia's involvement in Africa's energy sector is exemplified by its investments in Angola's oil industry. Russian companies have signed agreements to develop oil fields and build refineries, which are expected to boost Angola's oil production and create economic opportunities. Furthermore, Russia's Rosatom has entered into agreements with several African countries to develop nuclear power plants, which could be a game changer in addressing the continent's energy needs. Brazil has focused on sharing its expertise in agriculture with African nations. The ProSAVANA project in Mozambique, a trilateral cooperation between Brazil, Japan, and Mozambique, aims to develop agriculture in the Nacala corridor. By introducing Brazilian agricultural techniques and practices, this project seeks to improve food security and foster sustainable agricultural development in the region. South Africa, with its robust private sector, has been investing across the continent. South African telecom companies like MTN and Vodacom have expanded their operations in various African countries, improving connectivity and access to mobile services. These investments have not only generated significant revenues, but also contributed to the digital transformation of the continent. It's clear that BRICS investments have had a substantial impact on Africa's economic landscape. However, it's crucial to address the challenges and criticisms associated with these partnerships to ensure that they lead to sustainable and inclusive development. For instance, to mitigate the risk of neocolonialism, it is essential for African governments to negotiate fair and transparent agreements that prioritize local benefits. This includes ensuring that local communities are consulted and adequately compensated for any disruptions caused by large-scale projects. To address debt sustainability concerns, African countries should adopt prudent borrowing practices and explore alternative financing options. Strengthening domestic revenue mobilization and enhancing public financial management can also help in managing debt levels and ensuring that borrowed funds are used effectively. Environmental considerations should be at the forefront of any investment decision. African countries must enforce strict environmental regulations and hold investors accountable for any environmental damage. Promoting sustainable practices and encouraging investments in green technologies can help mitigate the environmental impact of large-scale projects. As we move forward, it's essential to foster a balanced and equitable relationship between BRICS and Africa. This can be achieved through increased dialogue, cooperation, and mutual understanding. By working together, BRICS and African countries can address common challenges, leverage opportunities, and build a more prosperous and inclusive future. Thank you for joining us on this exploration of BRICS and Africa's economic relationship. If you found this video insightful, please like, share, and subscribe to Voice of Africa. Your support helps us continue to bring you in-depth analysis on global economics and international relations, and how they shape the future of our continent. Stay tuned for more compelling content that keeps you informed and engaged.